A lot of people are going to think that this is another sign that we're heading into a deep recession. We do not think that's the case. This rolling recovery will lead next year into an economic boom, a productivity-driven economic boom.
The mainstream financial press is once again ringing alarm bells about a looming recession. Layoffs are rising, job numbers are weakening, and every other headline seems to be screaming crisis. But Cathie Wood isn't buying it. In fact, she's doubling down on the exact opposite scenario. In her latest interview, she dismantled the bear narrative and made one of her most contrarian calls yet. The rolling recession of the past 2 years is already over, and we're entering a rolling recovery that will lead directly into a productivity-driven economic boom. Her argument rests on 3 key forces: deregulation, accelerated corporate tax breaks, and the transformative rise of artificial intelligence. According to Wood, AI is not just a buzzword. It's a once-in-a-century technological shift that is unleashing efficiency gains unlike anything we've seen in decades. Companies are not failing because of automation. They're thriving by using AI to substitute capital for labor, boost margins, and fuel profitability at scale. And the evidence is in plain sight. Hundreds of billions in capital spending are flooding out of the hyperscalers, Microsoft, Google, Meta, Amazon, and others, as they race to build the infrastructure for the AI era. As Wood puts it, one company's investment is another company's revenue. That's why she believes AI infrastructure will be the single biggest growth engine of this decade. And she's putting her money behind that conviction. Through ARK Invest, Wood has been quietly building positions in 3 AI-focused companies that she believes will lead the next leg of the bull market. Let's break them down. AMD, Advanced Micro Devices, ticker AMD. For years, AMD was known as the underdog of the chip industry, overshadowed by Intel in CPUs and Nvidia in GPUs. But those days are over. Today, AMD is not only a major challenger, it's a cornerstone of the AI revolution. In its latest quarter, AMD reported $3.24 billion in data center revenue, representing a 14% year-over-year increase. This growth is driven by record adoption of its EPYC CPUs, which now power more than 1,200 different cloud instances. That's a huge shift in the cloud market, giving hyperscalers a reliable and cost-effective alternative to Intel. But AMD's true strength lies in AI inference. While Nvidia remains dominant in training, the heavy-duty process of teaching AI models, AMD is carving out a crucial position in inference, where trained models are deployed and scaled to millions of users. And inference is the real growth engine. Demand for inference workloads is outpacing training, and hyperscalers are looking for cost-effective ways to serve this explosion in generative AI applications. Here, AMD has a big advantage. Its MI355 GPU has been benchmarked to deliver 40% more tokens per dollar than Nvidia's B200. In other words, AMD gives cloud providers significantly more AI output for the same cost, a massive competitive edge when every penny matters at scale, and AMD's roadmap only strengthens this story. In 2026, the company plans to launch its MI400 Helios platform, a rack-scale system designed specifically for hyperscalers. With 40 petaflops of performance and 50% more memory bandwidth, the Helios platform is engineered to meet the way hyperscalers actually buy infrastructure today, not just chips, but entire racks optimized for AI deployment. What makes AMD even more unique is its push into sovereign AI projects. With more than 40 government-led AI initiatives worldwide, AMD is becoming a critical partner for countries that want to build their own AI infrastructure domestically. These long-term sovereign contracts diversify AMD's revenue streams, reducing dependency on cyclical hyperscaler demand and providing stability. Cathie Wood's ARK Invest clearly recognizes this shift. Her funds hold over $620 million worth of AMD, representing 3.45% of total ETF weight. For Wood, AMD is more than a semiconductor company. It's a systems-level innovator positioned to capture massive long-term value in the global AI inference market. TSMC, Taiwan Semiconductor Manufacturing Company, ticker TSM. The second company on Cathie Wood's list is not as flashy as Nvidia or AMD, but it may be even more critical. Taiwan Semiconductor Manufacturing Company, TSMC, is the backbone of the global semiconductor industry. the foundry that makes advanced chips for everyone from Apple to Nvidia. Unlike Intel, which is juggling manufacturing, design, and government partnerships, TSMC has a singular focus: manufacturing. That focus translates into efficiency and consistency that no rival can match. According to recent analysis, TSMC generates $8 to $10 of additional cash flow for every $1 of R&D spending, compared to Intel's yield of just $2. That's a staggering difference, and one of the reasons TSMC enjoys an enormous economic moat. Technologically, TSMC is years ahead of most competitors. The company launched 7nm chips in 2018, 5nm in 2020, and is already working on N3 and A14 nodes that extend its leadership well into the next decade. These cutting-edge nodes are critical for AI because the performance gains in GPUs and AI accelerators are directly tied to the sophistication of the underlying manufacturing process. Put simply, there is no AI revolution without TSMC. From Nvidia's accelerators to AMD's CPUs and even Apple's M-series processors, TSMC is the one making them at scale. And while competitors like Intel grab headlines with government subsidies, TSMC quietly delivers where it matters most: profits. Its return on capital employed hovers around 49%, far above the industry average. ARK Invest currently holds around $229 million in TSMC, representing about 1.3% of total holdings. While smaller than AMD or Nvidia, this position reflects Wood's belief that global leaders in AI infrastructure manufacturing are essential to sustaining the next productivity cycle. For investors, TSMC isn't just a semiconductor stock, it's the irreplaceable enabler of the entire AI supply chain. Nvidia Corporation, ticker Nvidia. And finally, we come to Nvidia, the company that has become virtually synonymous with AI. While Cathie Wood has been selective with her Nvidia exposure, ARK still owns nearly $250 million worth of shares across its ETFs. Nvidia's dominance is undeniable. But what makes it even more impressive is how it's consolidating that dominance into what some analysts are now calling an AI fortress. The biggest recent development is Nvidia's deep partnership with Intel. Together, the two companies plan to co-develop multiple generations of products for data centers and PCs. Nvidia's GPU chiplets will even be integrated directly into Intel CPUs, giving Nvidia access to Intel's vast x86 ecosystem in consumer and enterprise computing. Nvidia has also invested $5 billion into Intel, signaling this is not a short-term alliance, but a long-term strategy to expand its total addressable market. This deal could open Nvidia up to entirely new markets. Imagine consumer laptops, business PCs, and enterprise servers worldwide powered by Nvidia architecture deeply embedded into Intel CPUs. That's market reach on a scale no rival can easily match. But Nvidia isn't stopping at chips. The company has methodically built control of the entire AI computing stack. Its acquisitions, Mellanox for networking, OmniML for software, RU.AI for workload optimization, combined with its CUDA platform, create a vertically integrated ecosystem that customers find nearly impossible to leave. Hyperscalers rely on Nvidia because switching away would disrupt their entire workflow. This dominance is reflected in its financials. While Nvidia trades at premium valuations, those numbers are supported by extraordinary earnings growth and momentum that outpace the rest of the semiconductor industry. More importantly, as Cathie Wood has argued, AI spending is not slowing, it's accelerating. And Nvidia sits at the very center of that wave. For Wood, Nvidia isn't just a chip maker. It's the backbone of AI infrastructure worldwide and the launchpad for the next phase of the AI-driven productivity boom.